Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Erasca Inc., a clinical stage biotech company trading under the ticker ERAS on NASDAQ. If you're curious about investing in the biotech space, specifically in precision oncology, stick around because we're breaking down everything from financials to recent performance and long-term potential. Let's get started. So first things first, let's talk about who Erasca is and what they're all about. Erasca is a company laser-focused on discovering and developing therapies for patients with RAS-MAP pathway-driven cancers. These are some of the toughest cancers to treat, and Erasca is working on innovative solutions to target these specific pathways. Based in San Diego, California, they've been around since 2018, and they're still in the clinical stage, meaning they're not yet generating revenue from product sales, but are heavily invested in research and development. For those of you new to biotech investing, this is a high-risk, high-reward space, and Erasca is no exception. Let's dig into the details. Erasca's mission is pretty compelling. They aim to erase cancer by tackling some of the most challenging oncogenic drivers. Their pipeline includes promising candidates like naporafenib, which targets melanoma and other solid tumors, and ERAS-007, aimed at colorectal cancer and other indications. They've got a small but dedicated team of about 103 employees, and under the leadership of CEO Jonathan E. Lim, they're pushing hard to bring therapies to market. Being in the biotechnology industry within the broader healthcare sector, they're competing in a crowded field, but their focus on precision oncology gives them a niche. Keep in mind, though, they're pre-revenue, so their financials are all about R&D burn right now. Now let's talk numbers, starting with revenue, or, in Erasca's case, the lack thereof. As a clinical stage biotech, Erasca isn't generating any sales yet. For the past several years, including 2025, their revenue has been zero. This isn't surprising since their products are still in development and they're focused on clinical trials rather than commercialization. For investors, this means you're betting on future potential rather than current cash flow. There's no revenue segmentation to discuss here, either by product or geography, since they're not at that stage yet. So we'll move on to other financial metrics to get a clearer picture. Let's shift to earnings and see how Erasca is performing on that front. Looking at their most recent full-year results for 2025, they reported a net loss of about $124.5 million, which translates to an earnings per share of negative 44 cents. Compare that to 2024, where the loss was deeper at $161.7 million, or negative 69 cents per share. Over the years, losses have fluctuated, with a particularly rough 2022 showing a net loss of $242.8 million. The key takeaway here is that Erasca is burning cash as they invest heavily in R&D, which is typical for a company at this stage. The trend of narrowing losses from 2024 to 2025 is a positive sign, though they're still far from profitability. This is a long-term play, and patience is key. Diving deeper into their financial statements, let's look at Erasca's balance sheet and cash flow to understand their financial health. As of the end of 2025, Erasca had about $73.8 million in cash and cash equivalents, with total current assets of $286.2 million. Their total assets stood at $396.2 million, while total liabilities were $71 million, leaving them with a stockholders' equity of $325.2 million. That's a solid position, with a current ratio of over 10, meaning they've got plenty of liquidity to cover short-term obligations. On the cash flow side, they used about $95.5 million in operating activities in 2025, which is better than the $109.4 million burn in 2024. They're still not generating free cash flow, with a negative $95.6 million in 2025, but their cash reserves and recent financing activities, like the upsized public offering in early 2026, give them a runway to keep pushing forward with trials. Debt is minimal, with a debt-to-equity ratio of just 0.14, so they're not over-leveraged. Overall, financially, they're in a decent spot for a biotech at this stage, but the cash burn is something to watch. Now, let's tackle valuation. Erasca's current market cap sits at around $4.6 billion, with a stock price of 14 to 94 cents as of the latest data. Their enterprise value is roughly $4.63 billion, which accounts for their cash and debt. Since they have no revenue or earnings, traditional metrics like price-to-earnings or price-to-sales ratios don't apply in a meaningful way. Their PE ratio is negative at 34.08, reflecting ongoing losses. For a biotech like this, valuation is more about the potential of their pipeline and future market opportunities. The biotech sector often trades at high multiples based on speculative growth, and Erasca's valuation seems to reflect optimism around their precision oncology focus. However, with no near-term revenue, this stock is priced on hope and progress in clinical trials, which adds a layer of risk. All right, let's break down Erasca's strengths, weaknesses, opportunities, and threats to get a holistic view. Starting with strengths, Erasca has a solid financial position with significant cash reserves, bolstered by their recent $258.8 million public offering in 2026. Their focus on the RAS-MAP pathway is a unique niche in precision oncology, and their pipeline shows promise with candidates like naporafenib. On the flip side, their weaknesses are clear. They're pre-revenue, burning cash at a high rate, and fully dependent on clinical trial outcomes. Any setbacks could hit hard. For opportunities, the growing demand for targeted cancer therapies is a massive tailwind, and successful trial results could lead to partnerships or even buyout offers from larger pharma players. However, threats loom large. Biotech is highly competitive, regulatory hurdles are steep, and market volatility can punish stocks like ERAS if sentiment shifts. This is a high-stakes game, and while the upside is huge, so are the risks. Let's take a look at Erasca's recent stock performance. Over the past week, the stock is up 1.37%, but zoom out, and the gains are staggering, up 27.83% in the last month, 150% over 3 months, 250% in 6 months, and a whopping 350% over the past year. That's incredible momentum, especially compared to the biotech industry's more modest gains of 55% over the year. News of better-than-expected earnings and the upsized public offering in 2026 likely fueled some of this rally, with a 10.3% jump on a single day in March 2026. However, volatility is real. There was a 60% spike in January, followed by a pullback. Short-term, the chart shows strong upward momentum, but with such rapid gains, a correction could be on the horizon. If you're considering a position, keep an eye on volume and any upcoming trial updates for potential catalysts. Now let's try to pin down an intrinsic value for Erasca, though I'll be upfront, this is tricky for a pre-revenue biotech. Traditional discounted cash flow models don't work well here, since there's no cash flow to discount and future earnings are speculative at best. Instead, we can look at comparable companies in the precision oncology space and consider the potential market size for their therapies if approved. Erasca's pipeline targets large markets like melanoma and colorectal cancer, which could be worth billions annually if they succeed. That said, without concrete revenue projections or trial outcomes, assigning a precise intrinsic value is more art than science right now. Some analysts might value Erasca based on their cash runway and pipeline potential, suggesting a range tied to comparable deal values in biotech M&A. For now, fair value is largely sentiment-driven, and at a $4.6 billion market cap, the stock seems priced for significant success. If you're a long-term investor, you're betting on clinical wins rather than a specific number today.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.